Is it really cheaper to rent a house than to buy one in South Africa right now? The answer might surprise many, especially in the current economic climate dominated by high interest rates. The South African Reserve Bank's decision to hike the repo rate to 8.25% has escalated the prime lending rate to a staggering 11.75%, putting homeowners under significant financial strain. In this environment, Rhodes' report on the SA property market for the first quarter of 2024 brings to light some intriguing insights. According to the report, the national vacancy rates have seen a decline from their peak during the COVID era, which has consequently supported a growth in rentals. Official data from Stats SA indicates that nominal flat rentals have increased by 3.6% compared to last year. This trend suggests a shift in the market dynamics, favoring rental over purchasing. With interest rates at a 15-year high, the financial climate is steering South Africans towards renting. Let's dive into the numbers. How does renting compare to buying in today's market? As we peel back the layers of the housing market, the recent data from Stats SA reveals that nominal flat rentals in South Africa have seen an increase of 3.6% at the start of 2024 compared to the same period last year. This is a modest uptick, yet it reflects a trend of steady rental growth since the pandemic. In contrast, the latest figures from PayProp highlight that the overall rental growth for housing, including flats, was at 4.6% by the end of 2023. Now, juxtapose this with the current scenario for those looking to buy. The South African Reserve Bank has escalated the prime lending rate to a staggering 11.75% and the repo rate to 8.25%. This surge has significantly increased bond payments for homeowners, squeezing their monthly budgets tighter than a new pair of shoes. Here's where the arithmetic of renting versus buying gets interesting. Given the high interest rates, the monthly bond installments a potential buyer faces are considerably higher than renting a similar property. By opting to rent, individuals can save the difference between these hefty bond payments and more manageable rental fees. This difference can be tucked away, amassing a substantial savings pool over time. Renting not only appears cheaper, but also less burdensome in the current economic scenario. What does the future hold for potential homeowners in South Africa? As we look ahead, the economic landscape presents a challenging scenario for those considering buying a home. With the South African Reserve Bank's prime lending rate reaching a 15-year peak at 11.75% and the repo rate at 8.25%, the cost of borrowing remains steep. This financial environment is compounded by the broader economic outlook. Forecasts indicate a continuation of low growth rates in household incomes, painting a rather somber picture for the upcoming years. Such conditions strain the affordability of home ownership, as higher interest rates translate to heftier bond payments, reducing disposable income. Moreover, despite a slight recovery in rental growth rates, they remain below inflation, suggesting that property owners are consciously keeping rent increases modest to retain tenants. This strategy likely stems from an understanding of the broader economic challenges faced by many South Africans. The economic indicators suggest a continued advantage for renters in the near future. Is there a silver lining for those who choose to rent now? Absolutely. Let's delve into a strategy that might just turn the tide in favor of tenants. According to the insightful Rhodes report on the South African property market, there's a financially savvy approach to renting that could benefit many in the long run. Imagine this. Instead of pouring money into high bond payments, you opt to rent. The difference between what you would have paid for the bond and your current rent can be tucked away into savings. Over time, this isn't just spare change. It accumulates, growing into a substantial nest egg. This disciplined saving strategy could eventually enable you to make a higher deposit on a house. Why does this matter? Because a larger deposit can mean a smaller loan and less interest paid over time. Moreover, if you wait it out, you may find that property prices have adjusted to more favorable levels, making your investment even smarter. Renting now could pave the way for a more financially secure home purchase later. To rent or to buy? That is the question. In the landscape of South Africa's current economy, renting emerges as a beacon of financial prudence. With high interest rates and a less than promising economic outlook, the cost advantages of renting are clear. It allows individuals to save the difference between rental costs and potential bond payments, capitalizing on future real estate opportunities with greater financial flexibility. Before making a pivotal decision, weigh these factors against your long-term financial goals. Make a choice that aligns with your financial future. Consider renting as a viable strategic option in today's economic landscape.